Investment banking is often disliked and misunderstood, and it's clear why. Firstly, investment banks differ from regular banks, and their main focus isn't on making investments. So, people may wonder what these individuals do. And that's what we are going to find out in this video. But first, please don't forget to hit like and subscribe to this YouTube channel to stay updated on the latest in the luxury world. Here at Luxury Mindset, we bring you all luxurious information ranging from items, cars, houses, places, and even people who bathe in luxury. Not only that, but we also give you pretty much the amount you would need to purchase any of these luxurious stuff. So if you're interested in the rich, becoming rich, or even dreaming of lying on a mattress of gold or dollar bills, click the notification bell to keep yourself updated on this channel. Analysts are reported working 95 hours per week and getting less than 5 hours of sleep. A 100-hour work week is necessary for progression, but it can be challenging for those with low pain tolerance. Some analysts showered once a week out of fear of leaving their desks. An investment bank serves as a mediator, connecting investors and companies seeking investments. Similar to blood and food banks, an investment bank acts as an intermediary between investors and investment opportunities. Major investment banks, including Goldman Sachs, have expanded their services beyond traditional investment banking. Goldman Sachs now has 4 primary divisions. Firstly, there is a property asset management division that makes market investments using the bank's funds similar to a hedge fund. Secondly, there is a division focused on regular investing and lending, resembling a conventional retail bank. This blurs the line between a bank and an investment bank. The third division, Institutional Financial Services, offers services like margin loans and trade executions to investment funds, catering to the world's largest investors. The show industry primarily revolves around institutional financial services rather than investment banking. While these divisions may seem distinct to a layperson, they are not for investment bankers. Goldman Sachs' 4th division is dedicated solely to investment banking and operates independently from the bank's other functions. Smaller firms in the investment banking industry, known as bespoke or boutique firms, specialize exclusively in investment banking and do not have consumer divisions, robust wealth management arms, or lending activities. Investment banking involves less glamour than portrayed in Hollywood. It entails extensive work with Excel spreadsheets and PowerPoint presentations rather than constant monitoring of Bloomberg terminals or high-pressure sales calls. An investment banker's main focus is bringing deals together, similar to a real estate agent, but in the context of corporate transactions. The process begins with finding clients, often investors or founders looking to sell their company or equity. This is called a sell-side engagement, which involves compiling lists of potential buyers for the company. When pitching to represent clients in a sale, potential buyers are categorized as strategic or financial buyers. Financial buyers seek a good return on investment, including private equity funds, hedge funds, and family offices. Strategic buyers are companies looking to acquire competitors or businesses in the supply chain, while buy-side engagements involve assisting a company in acquiring another company for strategic purposes. As an analyst or associate, your involvement in sourcing deals is limited. You may attend conferences or networking events if invited by senior employees. Your actual work begins later, so understanding the process and tasks of investment banking is important. In investment banking, clients receive offers from multiple firms, assessing who can secure the best price for their business. When a managing director establishes contact with a potential client, they aim to convince the client's management team to share financial information. This is where associates and analysts come in. They work together to create a pitch deck, a 20 to 30-page PowerPoint presentation that demonstrates the team's deep understanding of the company and its industry. A pitch deck summarizes the investment bank's team, transaction timeline, potential buyers, and company valuation based on market analysis and financial data. It takes time to create pitch decks, even if they are ultimately rejected. If successful, Marketing materials called SIPs are developed for potential buyers or investors. SIPs contain detailed information about the company, spanning 50 to 130 pages, including goals, data, financials, and market research. This information is stored in an updated data room throughout the sales process. Physical document storage at investment banks has been replaced by virtual platforms like DataSite and Intralinks for secure document handling. Another crucial component included in the confidential information presentation is the reason why the company is raising funds. Companies raise funds for two main reasons. The first is to seek growth equity and expand operations. New shares are issued, allowing investment bankers to sell them to qualified purchasers. Existing investors aim for the raised funds to increase the company's overall value, surpassing the dilution caused by new shares. The second reason is facilitating payouts to existing shareholders throughout a buyout or secondary offering. Founders or early-stage investors sell their shares to new investors looking for long-term holding or strategic investment. No new shares are created in this scenario, and the funds raised go to the individual selling their shares. Google's acquisition of YouTube is an example of this, where existing shareholders receive the acquisition funds without issuing new shares. Maintaining the confidentiality of the company's capital raise and sensitive information is crucial to avoid any mishandling or potential damage. Competent investment banking teams ensure that the confidential information presentation is shared only with those likely to make competitive offers. Creating an SIP is a time-consuming and high-pressure task, as the data presented can significantly impact billion-dollar deals, and inaccuracies can expose the investment bank to liability. Once the SIP is completed and approved by management, it is distributed to the agreed-upon list of potential buyers, often numbering 80 or more. The team is then responsible for handling calls from these buyers, addressing inquiries, and providing precise answers based on the extensive technical information contained in the documents. These calls can be stressful, often involving the MD or VP and requiring effective marketing of the client's company while avoiding misleading statements that could lead to legal action or damage the investment bank's reputation. The marketing stage of a deal lasts up to 3 months. Potential buyers are narrowed down to around 20 or fewer. The goal is to secure the interest of at least 5% of these buyers. Selected buyers gain further access to data and meet with company management. Out of the 5 buyers, typically 3 would submit a letter of intent or LOI with deal terms. If the client accepts an offer, the deal moves to due diligence. During this phase, various parties review financials, personal charts, legal matters, and etc. Any issues must be resolved promptly. If all goes well, the buyer prepares a purchase agreement based on the LOI. The purchase agreement is a comprehensive 60-page document with terms, conditions, and non-compete clauses. Negotiations and refinements can take about a month. Once all parties are satisfied, funds are transferred, and the investment bank receives its fee. The team also assists with practical tasks like key transfers and account access. In acquisitions, ensuring staff payment and business continuity is crucial. The entire process can take up to 6 months, with minor issues capable of derailing the deal. Clients and potential buyers expect round-the-clock availability. Inaccurate information leads to extensive revisions and calls. Analysts handle multiple deals simultaneously, prioritizing work over social activities. Their lives just usually revolve around work and, well, getting some sleep. Investment banking is not typically a long-term career path for most individuals due to the up or out policy, where individuals are let go if not prompted within specific timeframes. Managing directors and vice presidents focus on business development, networking, and client engagement with a less intense workload and better compensation. Some bankers invest in country club memberships to access clients. Most investment banking analysts gain experience for a few years and then transition to senior positions in companies or move into private equity, leveraging their experience and connections. While investment banks may not be as malicious as portrayed, personal opinions on unrelated topics can vary. So what do you think of the information? Do you agree with the video? Let us know your thoughts in the comments. And if you enjoyed this video, please click the notification bell to stay updated with the latest in the luxury world, only here at Luxury Mindset.